Dubai's property empire, the rise of a global investment magnet. Dubai was once just a desert trading port. Today, it stands as one of the most aggressive real estate markets on the planet. Skyscrapers pierce the sky, artificial islands stretch into the sea, and luxury villas attract billionaires from every corner of the world. For the last few years, Dubai's property market has been unstoppable. Investors from Russia, India, Europe, and Asia have poured billions into the city. Luxury apartments, penthouses, and beachfront villas have been selling at record speed. Entire neighborhoods are being built faster than many countries can approve a housing project. According to One, Dubai recorded enormous real estate activity in recent years, with property transactions reaching around $207 billion in value, making real estate one of the most important pillars of Dubai's economy. 1. But behind the shiny towers and glamorous headlines, something interesting is happening. The people closest to the deals, the brokers, are starting to send a warning. Many of them believe the market is entering a new phase. Not necessarily a collapse, but a shift. Dubai has seen cycles before. During the 2008 global financial crisis, property prices crashed dramatically. Entire projects were abandoned. Investors lost billions. That trauma forced Dubai to rebuild its system. New regulations were introduced, developers became more controlled, financing rules were tightened. Since then, the market has matured and become more resilient. Fast forward to today, and Dubai has once again experienced an explosive property boom. Prices have surged since 2022 as wealthy buyers moved their money into the city. But as history teaches us, every boom eventually faces reality. Now, brokers across Dubai are watching the market closely, because beneath the excitement of record-breaking sales, subtle warning signs are emerging. And if you understand real estate cycles, you know something important. The smartest investors pay attention before the headlines change. Record sales and global investors fuel the boom. Dubai's real estate boom didn't happen by accident. It was engineered. Over the past decade, the government transformed the city into one of the most investor-friendly places on earth. No income tax, no capital gains tax, long-term visas for investors, and policies designed specifically to attract wealthy foreigners. The result? An avalanche of global money. According to market data, Dubai saw more than 215,000 property transactions, worth roughly $187 billion in 2025, driven heavily by luxury homes and international investors. The biggest buyers came from all over the world. Russian investors flooded into Dubai after international sanctions limited their access to Western markets. Indian buyers became one of the largest foreign investor groups. High-net-worth individuals from Pakistan, Afghanistan, and other regions also began shifting wealth into Dubai real estate. According to One reporting cited in property market coverage, Dubai has often acted as a safe place to park investments during times of geopolitical instability. When uncertainty rises elsewhere in the world, money flows toward stability, and Dubai positioned itself perfectly. Luxury projects became the star of the market. Palm Jumeirah Mansion sold for tens of millions of dollars. Penthouse apartments overlooking the Burj Khalifa reached record prices. Developers launched hundreds of new projects. Off-plan sales, properties sold before construction is finished, exploded in popularity. At the same time, Dubai's population has been rapidly increasing. Real estate analysts estimate the city could grow from around 3.8 million residents today to nearly 5.8 million by 2040, which will create massive long-term demand for housing. Infrastructure projects, new metro lines, and mega developments around Expo City and Dubai South have also strengthened investor confidence. For many investors, Dubai began to feel like the future capital of global wealth. But even the hottest markets have limits, and when growth moves too fast, something else often follows: supply. Lots of supply. And that's where the next chapter of the Dubai property story begins. 3. The supply wave. Why some experts expect prices to slow. Every real estate boom creates the same reaction. Developers build more. When prices rise rapidly, new projects appear everywhere. Builders rush to take advantage of demand. Investors rush to buy early. But eventually, supply catches up. And that's exactly what some analysts believe could happen in Dubai. According to One, credit rating agency Fitch Ratings expects a potential double-digit decline in Dubai property prices during late 2025 and into 2026, partly because a massive number of new homes are scheduled to enter the market. The numbers are staggering. Around 210,000 housing units are expected to be delivered in the coming years, nearly double the supply of the previous 3-year period. That kind of supply can change market dynamics quickly. For context, Dubai property prices had already climbed dramatically. According to one analysis, residential prices rose about 60% between 2022 and early 2025 as foreign investors poured money into the city. When prices rise that quickly, corrections often follow. It doesn't necessarily mean a crash, but markets need balance. Some experts believe the biggest pressure will appear in the apartment sector, where most new units are being built. Luxury villas may remain stronger because supply is limited and demand from wealthy buyers continues to grow. This creates a split market. High-end properties may continue rising, but mid-range and speculative investments could face challenges. Property flippers, investors who buy unfinished properties hoping to resell them quickly, are already starting to feel pressure. Analysts say resale activity in unfinished properties has been declining, suggesting speculation is slowing. Still, many brokers remain optimistic. Dubai's real estate sector has survived multiple cycles before, and the city's global appeal remains extremely powerful. But even optimists agree on one thing: the next phase of Dubai's property market will look very different from the explosive boom of the past few years. 4. Why Dubai still attracts billionaires and global investors. Even with warnings about potential corrections, Dubai continues to attract global wealth at an extraordinary pace, and there are powerful reasons why. First, Dubai offers something very few places in the world can match: financial freedom. There is no income tax, no tax on capital gains, no tax on property profits. For wealthy investors, that alone makes Dubai incredibly attractive. Second, the city has built a reputation as a safe haven during global uncertainty. When conflicts erupt or economies become unstable, investors often move their money into stable jurisdictions. According to reporting on international investment trends, wealthy Russians and other global investors began purchasing large numbers of properties in cities like Dubai as a way to protect their wealth from sanctions and geopolitical uncertainty. Dubai essentially became a financial shelter for global capital. Third, lifestyle matters. Luxury living in Dubai rivals any city in the world. Private beaches, 5-star hotels, luxury shopping, world-class airports connecting to every continent. For wealthy families, Dubai offers a combination of security, lifestyle, and financial opportunity. That combination is extremely rare, and it explains why the luxury segment of Dubai's real estate market continues to perform strongly. In fact, many analysts believe the ultra-luxury sector may remain resilient even if the broader market slows. This is because the buyers at the very top are less sensitive to price changes. They are buying prestige, status, and a global lifestyle. As a result, Dubai's real estate market is evolving into something more sophisticated, not just a boom and bust playground for speculators, but a global property hub attracting long-term international wealth. However, even strong markets face external risks, and one of the biggest risks right now has nothing to do with real estate itself. It's 5. The geopolitical risk: how global conflict could slow deals. Real estate does not exist in isolation. It reacts to global events. Wars, financial crises, sanctions, interest rates, all of these forces can influence property markets. Right now, geopolitical tensions in the Middle East are creating uncertainty. According to reports citing brokers in Dubai's real estate sector, ongoing tensions involving the United States, Israel, and Iran could temporarily slow property transactions in the region. Some brokers believe deals may be delayed for weeks or even months as investors wait to see how the situation develops. In times of uncertainty, buyers become cautious. Large investments like property purchases are often postponed until the political landscape becomes clearer. However, Dubai has historically benefited from global instability. That may sound strange, but there is a reason. When instability hits other regions, investors often move money into stable financial centers. Dubai is one of them. So while short-term deals might slow, long-term investment flows could actually increase. It's a paradox. Conflict can create fear, but it can also drive capital towards safer markets, and Dubai has positioned itself as exactly that. Brokers understand this dynamic very well, which is why many of them remain confident about the long-term outlook. Still, the next few years will likely test the resilience of the market, because real estate cycles always involve 2 phases: boom, then adjustment. Dubai's market may now be entering that adjustment phase. 6. The future. What smart investors are watching now? The Dubai property market is not ending, but it is evolving. The explosive growth phase may be slowing, and a more balanced market could emerge. some forecasts suggest property price growth could moderate significantly. Instead of the massive increases seen during the boom years, prices may rise at a slower pace. Some projections estimate annual price growth of around 5% to 8% in 2026, compared with double-digit increases in previous years. That kind of moderation is actually healthy. It creates stability, it discourages speculation, and it attracts long-term investors rather than short-term traders. At the same time, infrastructure projects and government initiatives will continue supporting demand. Dubai's population is growing, tourism continues breaking records, global businesses are relocating headquarters to the city. All of this creates long-term demand for housing. And perhaps most importantly, Dubai has learned from its past crises. After the property crash in 2009, regulators introduced reforms designed to stabilize the market and prevent excessive borrowing and speculation. According to one analysis, these reforms strengthened the financial system and helped the real estate sector become more resilient over time. For investors, the key question is not whether Dubai's property market will survive. It will. The real question is who understands the cycle. Because in real estate, fortunes are rarely made by following hype. They are made by understanding timing. The brokers watching the market today know something many investors forget. Markets don't move in straight lines. They move in cycles. And the next chapter of Dubai's property story is just beginning.